It is showdown day in Washington. McCarthy and Biden are going to be meeting, discussing the debt ceiling. Will a deal come out of this? I don't think so. But boy, is the market going to react one way or another. Before we jump into that and more, please hit that like button. Subscribe to our channel. It's right. It should be like right down there. We really appreciate that. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, create our own opinions on it, try to do the best we can. But please do your own research before any buying or selling. Don't take our word or anybody else's word as gospel. Kevin, we had some data come out this morning that was not great. We saw some more information on U.S. household debt yesterday that was absolutely terrible. But the markets are responding like everything is hunky-dory, and I couldn't agree with them less.
Yeah, I mean, this is I don't know, man. The bullshit is just adding up, just like the debt's adding up, and it's gonna at some point start to stink. And for us, we smell that shit a mile away. But for a lot of people, they just like bathing in it right now. So we're gonna have to see how this plays out. But numbers weren't great yesterday. Numbers that we saw this morning were not great at all. This is 100%. The market is wrong. The market is broken. But it's gonna take a while for people to realize that.
For sure. Let's run through those numbers real quick. We had retail sales data came out this morning. Expectations were a 0.8% increase. It came in at 0.4. People are trying to spin that narrative bullish. I do not agree with that assumption that it means that we're not facing a recession. I think that is absolutely false. We saw Home Depot report pretty bad earnings. They missed revenue by $1 billion. Second quarter in a row, they missed revenue expectations. They lowered forward guidance for this year, expecting lower sales throughout the remainder of 2023. The stock dipped, but it's like recovering a bit. I don't know if people are buying the dip because they see like, okay, we're kind of pricing in the lowered expectations. Therefore, they're going to be able to beat those expectations, or we're going to see growth in the stock. I think that could be leading to some of that. The numbers that flew under the radar yesterday afternoon that people aren't talking about as much, and I think are like just very important, is this U.S. household debt report that came out from the New York Fed. Total debt increased in Q1 by 0.9%, or $148 billion, up to $17.05 trillion. Wow, that is something. We passed $17 trillion in U.S. debt. USA. I mean, this is fan-fucking-tastic. We're the greatest in the world at debt. We've won the debt game. This number is up almost $3 trillion from pre-pandemic levels. So everything is fine. We're doing great. We're back in a bull market. Let's fucking go, Kevin.
I know, man. It's I mean, if you want to do it the American way, that's how you fucking do it. Just keep spending and just keep owing everybody everything. So absolutely insane that it's increased that much, and not even a whisper of this being a bad issue anywhere on Bloomberg or on CNBC. Nowhere on Twitter is anyone complaining about this. So definitely the markets have not reacted to this news at all. But once this finally shit hits the fan, it's just terrible fucking news, man. No way you can spin that as good.
And we're starting to slowly see, and it's one of those things where it happens slow at first, but the dominoes start to fall. We're seeing delinquencies start to go up. We're
Insane
seeing
amount.
it
Yeah.
in cars. We're starting to it's increased faster in cars. We're slowly seeing it in mortgages, and it's going to keep getting worse. Like credit card debt is still incredibly high. We're close to $1 trillion in credit card debt. I believe the number is 986 billion right now. That actually remained flat from quarter to quarter. So it didn't go up, which is good, but people also aren't in a huge rush to pay off their credit cards because they don't have the money to do it. And as interest rates start to go up, like stay elevated, and interest rates on credit cards stay elevated, that number will trend up eventually. And this assumption that people have, like right now, it's starting to get priced, like it is priced into the market that there'll be rate cuts this year. And people are acting like that's a bullish sign. The only way, in my view, and this is just my opinion, that we see rate cuts happen is if something breaks in the markets, and that is going to lead to an absolute shit show anyways. So either nothing breaks and rates stay high and interest rates stay high, and people accumulate more debt, and that leads to more problems down the road. We just keep kicking the can down the road, or the Fed is forced to cut because something has broken in the economy, and we are in an absolute shit show at that point as well. So I don't really see like a great outcome here. When I look at these numbers and I see the amount of debt, we don't have, student loans haven't started to be paid yet. Like that whole delay is still looking like, August or September. I believe September student loan payments are going to start to be due again. That's not a good thing. We've talked about
Great
this
timeline.
before, and
Great timeline. Q3,
like
Q4, man.
maybe we see, a little bit of a, continued. We've just been trading sideways, right? Like everything's trading sideways. We're still in this range with crypto. We're still in this 4,100 range for the S&P, and it feels like it's just going to stay that way. And the longer I'm not an expert reading charts, Kevin, but it feels like from past events, from what I've seen before, that the longer we stay in this really tight range, the more violent the next big move is. And I have a hard time seeing that move to the upside.
Yeah, absolutely, absolutely. It's I mean, I'd have to be looking at the specific chart, but it's pretty much a continuation pattern, and it's a continuation of the trend. And make no mistake, we're still in a bear market. All this data absolutely proves that we're still in a bear market, and that liquidity is drying up. People don't have the funds to be spending, not just paying off debt. I mean, that's one of the big ones. But it's absolutely insane, just how long we're staying at this level. We looked at the VIX prior to 2008, how long it was just consolidating. It was in that continuation pattern, it's going sideways. And then finally, it just absolutely shot up. That might not be the greatest, example, because the VIX is relative to how the S&P reacts. But still, these things, they're pretty much just loading patterns. And then eventually they are going to break either one way or the other. And for the most part, it's probably going to be down. There's no way I see anything bullish saving this entire market from falling into a deep recession. Again, one that I think is worse than 2008. And then you made a great point about, the Fed, cutting rates. I don't see that happening. I think the last, when they did in 2008, that was when the housing market absolutely just collapsed. Like that was their reasoning for cutting rates back in 2008, if I'm not mistaken. And right now, they haven't broken anything. Like you said a billion times, they've, the banking industry, a little bit bruised, not broken. It's been bent, but something is going to give, whether it's commercial real estate, whether it's banking, whether it's, I don't know, what else could we talk about? Freaking just regular housing. It could be, any of these markets, these large markets everyone's exposed to.
The more I look at the vacancies in commercial real estate, the more clear that is that it's going to be something like we look at Chicago, San Francisco, New York. All of these cities are 20+% vacancies, and it's going to keep going up.
Yeah,
and that the chickens are going to come home to roost at some point, and it's probably not going to be until 2024, 2025. Like this is not a short-term thing. This is going to be around for a while. So I'm not super, bullish on a recovery anytime soon. Speaking of the VIX, I was watching Bloomberg this morning, which Bloomberg's my favorite way to start the day. I love Bloomberg surveillance in the morning. I think that crew is awesome. They had somebody on there talking about the VIX. VIX was at about 17.5 this morning, and the guest they had on there said, "Wait till you see the VIX cross 20." And I'm like, "Buddy, wait till you see the VIX cross 40." Like that is that's only 2.5 points away. People are like the number 20 is not going to be what really terrifies everyone. It's going to be when we see one of these big spikes up, like we saw. It only went to 30 with the fear in SVB back in March. Like just you wait. It's going to go higher than that. I don't love the idea of it, but it's going to happen. It has to. So that is all I have on the debt side of things. I do want to talk about what Michael Burry is doing. A fan favorite of this show, because he is making some moves, and he is going, not surprisingly, contrarian here, which I love that. I love that way of thinking. Just from my days of playing poker and all this stuff, like a contrarian approach is going to lead to higher volatility, but it's going to lead to higher upside. And if you have conviction in that higher upside, then it's usually worth the risk. So the latest thing that I saw from him yesterday was he doubled his position in Alibaba. That's the second biggest position in his holdings. And he tripled his position in JD.com Incorporated, which is the biggest position in all of his holdings. Those are two Chinese, big retail tech companies. I thought that was really, really interesting. This was on the heels of adding Western Alliance, PacWest, and First Republic to his portfolio. Western Alliance is the 12th biggest position, PacWest 17th, First Republic 18th. And I have it looks like he's got about 21 different equities in his current asset management portfolio. It's a pretty interesting mix of Chinese tech and a lot of financials as well.
Yeah, it's extremely interesting. I'm not too surprised by the, having some exposure to the Chinese market. Some of those stocks, I think that's honestly probably not a bad idea. I think a lot of the reason he added to those positions was, COVID was going to be, those restrictions are going to be loosening back in January of this year. So he bought them prior. Then he's still adding to these positions, which is pretty interesting. So maybe he sees, China being maybe China seeing a better outlook when we're going into what we're seeing in the US market. Having exposure to other markets too is just, a good way to, hedge your bet against maybe your home market like the US. So I think that's not necessarily a bad idea. I think that's probably going to be pretty beneficial for him. How big? Who knows? The guy's playing with a lot of money, so maybe he starts to see some extreme gains in that department. But for some of these banks, again, I don't think the banks are bad idea when they're down this much. Again, they can go down further. I think they are. But if you're thinking long term here, you're getting 87% off some of these some of these from where they were a few weeks, months, years ago. Not terrible. Not terrible at all. So it'll be really interesting to see. It seems like the banks always bounce back after a recession, though, right? Some people, at the end of the day, no matter what the banks do, people got to put their money somewhere, and they tend to put them back in the banks because they don't know how to, put it into other assets that potentially could help them grow. So it'll be interesting.
We've also seen that, banks, unlike other sectors, the government's not going to let banks fail.
That's true
right?
too.
Like
Yeah.
they're going to find a way to help with recovery. So, especially when you have First Republic on the heels of going down 97%, Pac West going down 79%, to buy that, the downside risk, like we talked about, is not particularly high, but the upside is.
Yeah.
If things start to bounce back and eventually recover. So I thought that was really interesting. The Chinese tech side of it, we're seeing a lot of funds exit China because they feel like they missed out on the reopening play. There was like the big talk of a lot of these funds, and maybe they did, but I think they're just being impatient. And we've seen Burry can be more patient than a lot of these funds can. So I think that was an incredible. I'm looking forward to seeing how that plays out, because it seems to me like he bought at a good time. I was a former holder of Alibaba. I sold before it really tanked, just because I didn't like what I was seeing there with just all the regulation issues. And ever since they announced that they're going to be splitting up into all these different companies and raising for all these different companies, and the price went up, I was like, okay, this could be an interesting. I could get back in if I wanted to, but yeah, I'm excited to see how this plays out for Dr. Burry and if he's able to prove everyone wrong again.
Yeah, I mean, he's proved people wrong. Again, everyone just talks about the Big Short, right? Like, oh, he held on to his position for a long time. He was more wrong than he was right until it finally hit, right? Until the bet finally hit, and when it hit, it was big. But the other thing that a lot of people forget about him is that he was betting on farmland, agriculture for 10 years before where we are currently. And look how important farmland is right now. You see tons of these corporations like Bill Gates and all these other people that are buying massive amounts of farmland, and they're doing all tons of production. We're doing agriculture, we're doing all these Beyond Meat and stuff like that. We're planting soybeans, everything like that in the US. And it's kind of hard to get a hold of farmland now, but this dude saw how important this is going to be 10 years prior. So imagine how much his portfolio is if he still has some of those positions and some of those properties. Like, the dude thinks ahead, he thinks long term, and again, when it hits, it's crazy. So seeing this, he's probably not even worried about China in the short term. He's probably thinking like 5 to 10 years how this is going to play out.
Yeah, I agree. We talked about how the middle class in China, in India, is starting to expand, and I think these are bets on that expansion of the middle class in those areas. So I think it's an incredibly interesting play. Very excited for it. What else do we have to discuss today? The charts, I don't know if you want to look at anything there. They look pretty boring. We have the debt ceiling meeting with Biden and McCarthy at 3 p.m. Eastern, as expected. It won't probably end until after the markets are closed, but we'll see. The futures, the after hours are going to be pretty volatile, I would imagine, and then crypto, I have to think, will take will show a little bit of the market sentiment as well.
Yeah, man, I'm just looking at the thing for me is just Bitcoin dominance. Like every time Bitcoin drops, like it dropped $400, dominance obviously dropped a little bit, but it's right back at like 48%. It's still extremely high for me. That worries me more so than anything. There's a good chance that we could potentially still hit, what was the number that I threw out there on the 50 moving average? About 27.7. That's very possible we could hit around there, but for the most part, I think the move is down. And again, I still believe that 23 to 25 is going to be our bottom range. What's going to bring us down there? Who knows? Maybe it's this meeting. I do think that we are going to start seeing some volatility, maybe even going into Memorial Day weekend, because then it's what? This is the first, no, this is the second. We're going to the third month of Q2. Summer months, people like even Biden going away right now, like people are going to be leaving the markets pretty soon. So I wouldn't be surprised if we do see some negative price action, then we see some slow growth over the summer and before we start seeing some, the volume pick up back in the end of the year. But for right now, this week in the short term, Bitcoin dominance is all I'm watching for crypto. I think Bitcoin's going to be seeing under 27 pretty soon. We already saw it this morning. A lot of these altcoins are probably going to bleed pretty hard too. Again, it's a matter of time. We're being patient. I see even the DXY right now, it's bouncing back from where it was yesterday. Pretty good. It wicked down, shot back up, but nothing that we really need to check into. Like right now, it's just patient, watch, stay vigilant, and then any stocks that you are interested or crypto stuff like that, just keep an eye on them because I do think a movement is coming soon. I do believe that, and I truly do. But nothing worrisome if you are a bear. That's all I can say.
Yeah, I'm very zen right now. Okay,
Same.
just stay zen, stay patient. Our time will come. We all know it. The cracks in the foundation are starting to get bigger. It's happening. Slow at first and then all at once, right? So
exactly. You at least expect it.
Yep. We got, I don't think they're going to make huge progress today in these debt ceiling negotiations. I just don't. And I think we're going to see the market react accordingly. Is this going to be the opportunity to buy the dip, like the bottom? No. Is there opportunity for a little scalp trade here? Maybe, and I might dip my toe into those waters a little bit, see if I can, make a little bit of a trade there if we get that news that, if they didn't make a lot of progress. I think they'll get there eventually. Will the markets be volatile before that? Yes. Do I see that as an opportunity? Also, yes. So I'm not the biggest trader, but I do try to look for. I'm not a high frequency trader. I look for opportunities and I try to move with weight into those. And I think that's what I might do here. So that is going to wrap it up for today. Not financial advice on that point. Thank you everybody for watching. If you have not yet, there's some buttons down below. Like I said before, there's a like button. There's a subscribe button. You can drop a comment. I think there's a button to share it like on social media. Like 1, 2, 3, all 4 of those. If you did that, would mean a ton to Kevin or I. We appreciate everybody for watching. We love doing this show. We're going to keep doing this show. So thank you again. Have an awesome day, and we will see you tomorrow.
Take care, everyone.